Guys, it's Carter. Welcome back to the channel. Now in today's video, we are going to be talking about the top 3 trading indicators you guys need in your strategy for 2025. So I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys want to learn more about swing trading and how I find my opportunity, how I trade, my entries, my exits, my risk management systems, check out our school. It's fantastic. We offer private live streams, quizzes, lectures, a group chat, but more importantly, it's like a college class. We have a final exam. We teach you to trade. It's not a get-rich-quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years of trading full-time. We talk about how to go through that transition from working to becoming a trader. So check it out down below, and you guys can use code 2025 to get 51% off. Only 1 day left for that code, so check it out down below. Guys, let's jump into the computer and see the 3 best trading indicators you guys need to make money. So the first thing that you guys need is going to be a broker, right? A broker at the end of the day is going to be your bread and butter. This is going to be how you guys can actually buy stocks. And if you don't have a broker that offers good charting and, the indicators to begin with, it's going to be just hard to succeed. So the broker I use is Moomoo. I'll put a link to them down below. You guys can get up to 20 free stock by signing up. So click that link, sign up. It's free. So check it out. All right. So what are the top 3 indicators you guys need? The first indicator that I use is going to be moving average lines. Moving average lines are my bread and butter. I use 3. I used to use 2, and now I use 3. I added one more, a couple of weeks ago. But why I love it here is you guys can kind of see here we have 3 lines, right? We have the yellow, blue, and red. Okay. These moving average lines are it. So they act as support, they act as resistance. And so the red is the 200-day moving average line, the blue is the 90-day moving average line, and then the yellow is the 50-day moving average line. The main difference between the 3 is going to be support strength and resistance strength. So the higher the moving average line is, so the 200, so the red moving average line is going to be a harder support than the 90. Now the 90 is going to be a harder support than the 50. So the main difference that I use them all for is for trend indication, so you can look at it and see the trend of the stock, and then support and resistance. When a stock is above it, like it is in here, right, up in this whole section over here, this is where we see the tendencies of getting support. But when the stock sells off below it, you can see where it hits it and just has that hard time breaking above it when the stock is trading below the moving average lines. So think of this, when the moving average lines are above the candlesticks, they're going to act as resistance. When they're above it, they're going to act as support. So this is a stock that we actually recently took a trade on. This is GNRC. Now, we traded this because of that 200-day moving average line and because it had that nice trend. So this stock had 2 support lines. It had the trend line, as you can see, buying pressure, buying pressure, buying pressure. Also, it had the moving average lines. So the more supports you have, the better off you're going to be. Okay, so now another indicator number 2 is going to be the RSI. The RSI stands for the Relative Strength Index. This tracks momentum. Now, this is this one down here. This is this green squiggly line. So you guys will notice that we have an 80 and then we have a 20. So the higher up, so if it's an 80, it's going to be more of an overvalued point to enter the stock. So we could start seeing selling pressure. Now, anything around a 20 could represent a buy. So looking at this, let's break it down. We have support on the moving average line, support on the trend, and an undervalued RSI. Let's look back. The last time it was trading for a 20 was back in here. And what happened? Huge buying pressure. The stock went from $80 to about $115 in about 2 weeks, actually a little less than that. And that's a 31% return. So now, as we look at the stock present day, we go, well, it's trading for a 20. The last time it was trading for a 20 on the RSI was all the way back in, where the stock had a great move. So anytime you trade, you want to go through and make that checklist. So what's the support? What's the moving average lines? What's the RSI? You don't want to just look at a stock and go, "Yep, let's buy it." You want to have that checklist. All right. Another indicator that I use and that I would highly recommend using is going to be something called a MACD indicator. The MACD indicator is an indicator used for entries and exits. So, why people use it, okay? You'll notice down here we have all this stuff. It may seem super confusing, but just pay attention to the orange and blue lines, okay? The orange and blue lines, the orange line is what we call the signal line. The blue line is the MAC line. So looking here where we have the signal, let's make this a little bigger so you guys can see. So looking where we had the signal break up through that blue line, the MAC line, represents an entry point. So right in here, okay? This is an entry point and this is the exit point. So break up is enter, break down is exit, okay? So now looking at this stock, let's go ahead and show you. This would have been the entry point and this would have been the exit point. That great move just by looking at that MACD indicator. So now we had the signal line, so we could see more buying pressure out of the stock. And that's exactly what you want to use. You want to use all these indicators as indicators and kind of judge it if you should enter not just off of one, but off of a variety of them. Look at indicators on the lower time frames and other time frames to determine your entry points. Going to the hourly, looking at those breakouts. That's why we got in on this one, is because of that breakout, keeping our stop loss, near and around 156. But we're just continuing to let this thing ride out, see if it will break above these moving average lines and start using them as support, kind of like how it did in here, where it just started getting buying pressure above them. So that's kind of the three best indicators I use every single day for swing trading, and how I use them this quit my job, right? I've used all these for years. I absolutely loved them. So hope you guys all enjoyed it. Don't forget to sign up with Mumu. You guys can get up to 20 free stock. Sign up with our school. You guys can use code 2025 to get 51% off. So invest into yourself, invest in that education, go into 2025 with a game plan to make money, guys. So hope you guys all enjoyed it. Hit that like button, subscribe, and we'll see you guys in the next one. Take care.